Okay, I am really thrilled to introduce our next guest, the legendary Debbie Cafaro, Chair and CEO of Ventas, who has joined us for a keynote chat. We originally called it a fireside chat, but maybe Zoom will act as the bonfire to support us here. The title is The State of the Real Estate Markets, the Economy in General, and of course, we're going to cover healthcare real estate. So Debbie is an old friend of our program. I think she first joined an NYU REIT panel 18 or 19 years ago when Ventas was a minuscule company, and the traditional real estate guys in the room were wondering what the healthcare people were doing there and whether that was really even real estate and so on. And Debbie explained it to them and proved them wrong on pretty much everything they said back then. Since back then, 18, 19 years ago, Debbie has grown Ventas from about a 200 million company in 99 to a 28 billion company with an incredible 20% per annum shareholder return over that period. Debbie is one of the key thought leaders in our industry. In addition to Ventas, she chairs the Real Estate Roundtable, the Chicago Economic Club, and she's perennially on pretty much every list of top CEOs and leaders in the world. Used to be exciting when Debbie got on the list. It's kind of boring these days. And Debbie is also on the board of PNC Bank, University of Chicago, and of course, a proud owner of the Pittsburgh Penguins. So she has an unusually broad perspective on many of the issues we're going to talk about. So Debbie, given all of your hats and perspectives, you really have unique visibility into many segments of the economy and society in general. How are you feeling about things now in terms of the economic cycle, the COVID/vaccine cycle, and broader trends in society in this very strange period we're living in?
Well, Robin, I want to thank you for having me here. It's always a pleasure, and we never could have grown the way we did without Wachtell at our side, and we appreciate our partnership with you. It has been an amazing year or so. I'm glad you're asking me these questions after the vaccine and the hope that the vaccine has brought, because last year has been an incredibly grueling one across the businesses and incredible organizations that I've been privileged to lead and am a part of. And I want to categorize them a little bit differently. I'd say the Economic Club and the Real Estate Roundtable member organizations that really had to pivot and think about their membership in a really unique way that they really were not equipped for prior to the pandemic. And, both did a really good job in figuring out what their core mission was and adapting to serve their members. And in the case of the Roundtable, really doing a great job in terms of policy on whether it's infrastructure or aid to households and workers, and in particular, keeping the capital markets open. We really distilled down to what were the key policy areas, and then how can we keep our members involved and engage and provide help to them and assistance as well as engagement. Same thing with the Economic Club, really a very storied organization, 93 years old, always did things the same way, always in person. And I'm really happy to say that both of them not only fulfilled their mission, but really adapted in a way that made them better during the pandemic. But it was really stressful, I would say. Right now, I think we are poised really for a breakout and to the upside in the economy. And we can see that through the lens of financial services, which you mentioned with PNC. The economy, there is so much demand in the economy, But I would say when you look across some spaces, those are going to be longer tail recoveries that are going to be more tepid. And I fear that some subsegments of commercial real estate may be part of that. And we can talk about maybe what those may be. But seeing it through a financial services lens, getting credit card data, all that kind of information is really helpful. And I do think with the stimulus that the policymakers are bringing to bear on the economy, we're on the precipice of perhaps infrastructure spending, which we have wanted for a long time in the real estate industry, and as a country we need. That is really, and then the pent-up demand from consumers, I think is going to be really strong. But corporate activities in many cases are going to be muted. And we see that in demand for office space. I think that is going to persist. We see it in terms of corporations' willingness to convene, maybe at sporting events, take out customers, business travel. Some of these things may be longer lived than others. And in our business, which has been hard hit in some but not other areas, we do see resilience there because of demographics and being a need-based business. And we believe that there will be, and we're seeing already, a recovery in demand. And then finally, I'd say universities have been hard hit, but the demand there for in-person activities, along with some interesting ideas about remote learning and the mission of the university. I mean, that's been really interesting too. And I think you'll see universities come back. Students want to be there, and professors want to be there by and large when they're not on their many sabbaticals. And so I think you're going to see those ecosystems really come back strong as well.
So given the strength of the recovery, which I think you're predicting, what holds back the areas that you think don't come back? Is it fear of more COVID and things like that? Or is it that the genie's out of the bottle, technology has actually changed the game and they've become a little bit obsolete?
I think it's two thematics. One is there were certain areas where demand was diminishing. And we can think about the mall, we can think about that's really the primary example I would give. And I would say some of the trends we've seen with e-commerce have accelerated those issues to a point where it's going to be hard to go back to where we were. So some is just an acceleration of a trend. In terms of business travel and business convening and being in the office, that is a newer trend where organizations have understood, large corporates in particular have understood both the employee desire for more flexibility, which is a competitive advantage in hiring. They've understood how productive they can be, and they've understood some of the cost savings that can be associated with a more flexible work environment, with some people being fully remote, other people being hybrid. And I think the productivity has been good. The cost savings can be captured, but there's still a desire for collaboration and being in person. But that's a new trend that I believe will continue for the near term and intermediate term.
Mm-hmm, mm-hmm. And in terms of the vaccine itself, you're closer to kind of the healthcare system in this country than most real estate people. Do you think now we've got it under control with the vaccine and the masks and so on, or are you worried about COVID-2 or something like that?
I am so much more optimistic and have become kind of an armchair epidemiologist and healthcare expert in COVID because I had to be. We were as close to the front lines as any real estate person could be. And it was really important to grasp the magnitude of the pandemic early and really be able to react to it. I think that I'm very optimistic. We owe a debt of gratitude to the researchers and the scientists who have accelerated vaccine discovery in a way that's never happened. And now to the Biden administration that's effectively pushing the vaccine out in an aggressive, ambitious way so that everyone can get the vaccine and get us past the pandemic. So I'm super optimistic. That having been said, we are at a critical juncture where we're not over it yet. And I think some of the behaviors and policies are premature and have the risk of extending it, not ending it. We need to stay the clinical course for a little while longer, even though we have efficacious vaccines and we know what works. But we are likely to see another little spurt here. I hope it's little, but another a dose of cases before we get to the end of this. And the other issue is we see the variants and we see a number of cohorts of individuals who refuse to take the vaccine for one reason or another. And that puts the whole economy and others and public health at risk. And so there needs to be a really strong initiative to get everyone or substantially everyone to take the vaccine.
So in terms of long-term implications of this period we've gone through and focusing kind of on commercial real estate for a moment, there's a lot of debate about whether COVID has reversed densification. What's your view on that in terms of the properties you want to buy in the future? Is it going to influence where you buy? Are you going to go further out of the cities now? How do you think about that?
Well, we've always had a very diverse portfolio that has never been located simply in coastal cities. We are in coastal cities, but we're also throughout the United States and often in the suburbs where our demographics are. It's been really interesting the last decade or so with the incredible move of not only young people, but also empty nesters really moving into urban cores. And I think that the suburbs have suffered as a result. And now we're seeing a reversal of that pattern. And because of COVID, and that is one of the patterns I could definitely see persisting for the intermediate term, where there's more balance between the city and the suburbs. The younger people are still going to want all the activity and creativity that comes with being in a great city. Cities are one of the greatest inventions of civilization. And so that I think the desire for younger people to be in the cities will continue. However, I would say it's related to this issue of whether most workers are in a hybrid mode. And if they are, the need to live close to work, the desire to live close to work will be dissipated somewhat. And that will also contribute to, I think, a bit of suburban revival that is going to continue. And particularly for families with children, which is why the suburbs were invented in the first place. I think people are seeing the benefits of a little bit more space, and that is going to stick for a while. But I do think the cities will revive, and maybe at lower price points, which will give them perhaps a little bit of the grittiness and creativity that we like them for, but it won't be as good for commercial real estate values, perhaps for a while.
Speaking of creativity, some of the properties you have are life science oriented.
Yes.
And as you think of the economy generally, tech and life science did well through COVID, other things less so. You've got a mix of properties, but one of the things you've got is life science.
Yeah.
Do you see that being, just like tech, a continuing growth mode for as far as we can see, or is that going to level off as the world kind of normalizes a bit?
I think life science is one of the greatest sectors in commercial real estate. We got into it in 2016 Now we have 9 million square feet on the campuses of major research universities and in 3 of the top 5 cluster markets. And we saw the promise in the asset class, again, very demographically driven, because by 2030, over 170 million people in the United States are going to have at least one chronic condition. And one of the things that life science brings is this idea that the researchers are really looking for cures for and treatments for chronic disease, as well as extending life expectancy. And that is really one of the keys as you think about our healthcare costs in the future. Managing these chronic illnesses in a very cost-effective way is one of the keys for us with an aging demographic in our country. And so we saw the promise in it. Many others saw the promise even earlier, but we did get in 2016. The asset class has only done better and better and better in the time since then. COVID has really put an exclamation point on the importance of the business. The capital flows into the biomedical research areas and life science have never been higher, whether it's from the NIH or whether it's venture capital, whether it's big pharma investing in buying some of these life science companies that have a promising drug or even a molecule now is worth 7 billion or something crazy. And so those capital flows create more companies, more entrepreneurship, more innovation, which then creates the demand for the real estate. And that is not an area, I mean, you can't cure cancer in your kitchen, right? You have to be in the building. And so that has been an area that has continued to grow in valuation and in investor interest over the 5 years we've been in it. And as I said, so many of the tenants have worked on combating COVID. It's been super inspiring, and it has reinforced the importance of this industry. And so we expect that to continue. And even during COVID, I mean, we've invested about $1.3 billion in two buildings, one in South San Francisco, which is the birthplace of biotechnology. I mean, incredible. And then we just bought some buildings that are labs on the Johns Hopkins campus, which is a nice intersection between life science and academic medicine, where we are really quite experts.
So I find it interesting that you, during COVID, in this period of tremendous uncertainty, you pulled the trigger on some things, some hard decisions, which gets into an area we've talked about over time, which is leadership through crisis. What have you learned through this crazy period, and how do you make decisions like that when you've no idea what's happening 2 weeks down the road with all that uncertainty?
Well, one thing about having longevity is that you get a lot of experience in crisis management. Of course, I started at Ventas 22 years ago in the midst of a crisis at the company. And then we've been through, of course, 9/11, we've been through the great financial crisis, now we've been through COVID. All have been very different, but having crisis management experience is something that never goes out of style. So I would say that. Secondly, I mean, we are always prepared for a downturn or an external shock. So we have tried to build a big diversified company with a strong balance sheet and strong, reliable cash flows that can withstand external shocks. And I think if anything, Ventas proved this year that we have, even with the COVID impacts, which were significant, we've proven that we were able to build a business that's resilient and that can withstand shocks. Then once you're in it, I think really early on understanding what is happening. And we were among the first in real estate, I would say, to really grasp the magnitude of what was happening. And that is from having this big perspective and having, talking to the big multinationals. What are they seeing in China? Talking to people really around businesses, different businesses outside of real estate, outside the US. What were they seeing? and grasping it early and then aggressively acting to protect the firm. Number one, protect the stakeholders, batten down the hatches, do what you need to do to have staying power. It's a classic kind of 101 crisis management. And that involved everything from drawing on revolvers, which is always unpopular, to making sure we were in February getting people ready to work remotely, to stopping some developments that we were just getting ready to start, stopping investment activity, capital preservation, all of the things, and conditioning the workforce to what might communicate to the board and the workforce, what might be ahead. We didn't have the answers, but we grasped what it could be. And you have to have the courage to act, even if you may turn out to be foolish. And all my real estate friends would have said, Debbie, I told you it was nothing but a head cold. I don't know what you got all worked up about, did all these things. You have to be willing to accept that and have the courage to act. And we did that. And that was really important. And then quickly, also, once you're stable, you can start to kind of get your head up and say, where are the opportunities? And, we were able at the end of the day, as for many of these organizations that I'm involved with, PNC is a poster child of that, to be strong enough and alert enough to capture opportunities and make advances against our strategic objectives. So we started a third-party investment management business in 2020 that now has almost $4 billion of assets under management. We acquired these assets, which took a lot of courage and so far have been incredible decisions, but were very hard decisions to make at the time. But we were in a strong enough position. We were able to get partners in our fund to invest with us in those assets. And so they were sensible, well underwritten investments in an asset class whose future we strongly believe in. So we were able to make those investments.
So I think you touched on most of what you call the verticals in your business. I don't know that you've talked about hospitals yet. Tell us about that business and how it fared through COVID and where it's going.
Mm-hmm. Well, we have 5 verticals, and COVID was really a tale of two cities that kind of proved out the benefits of a diversification strategy that we've followed the whole time. That's one part of being able to withstand these unknown external shocks. We never know what's going to come. We just know something is going to come every 10 years or so. And, we've invested in the half of the business that did incredibly well last year was composed of 3 of them: life science, acute care hospitals, and then specific types of hospitals called kind of specialty hospitals, which is some of our core business from 20 years ago. And when we acquired kind of the hospitals, specialty and regular hospitals, we did so at yields, let's call it 9% yields. And real estate investors typically think that these are very risky businesses, which they're not. And this year kind of proved that out, because one of the benefits of those businesses is that they are really subject to Medicare and Medicaid reimbursement. They benefit from incredibly strong government support, as we saw this year. So in medical office, physicians and our hospital tenants did very well financially, mostly because of government support for their businesses during a very stressful time. And the same thing with the long-term acute care hospitals, which served an incredible purpose during COVID, it being really a safety valve for acute care hospitals as they were kind of at their limit of capacity, and also received government support. So those assets paradoxically did incredibly well. And with the medical office business, which is a reliable growing business really carried the firm during the year.
Benefits of diversification, as you put it. So let's talk for a moment about ESG. You were early to focus on that and see the importance of it. How do you think about ESG, and why do you think it's so important?
Yes. I mean, again, it's environmental, social, and governance. I think it's important to say that. I believe it's so important, and we were ahead of the curve because what it means is doing the right thing by your employees, doing the right thing by your stakeholders, by your communities. And that's really the easiest way for me to think about it. Of course, we have announced ambitious sustainability goals on the property side, and energy saving, water saving. Those are good for business. Of course, they lower operating costs, but they're also good for the planet. They help us recruit because, of course, younger employees really want to make sure that you're about climate change and that you understand it and you're doing something about it, more importantly. So
older ones too.
Yes, many older ones as well. But I mean, it's an important recruiting tool. And, socially, we've been very fortunate. You mentioned how well the firm has done over 20 years. And we feel it's important to contribute to our communities as part of that. And we typically do that through, we have a lot of racial justice initiatives. We're really focused on gender equality. We're focused also on just making sure that, we're investing in the communities where we have operations and in things that are important to our employees and our communities. And then the last is governance. And I really think governance is incredibly important and dedicate a lot of my own time to making sure our board of directors at Ventas is a competitive differentiator. And we work really hard over the years to do thoughtful refreshment. We've elevated and diversified our board so that we'll have 4 women of 11 board members in May, 2 incredible Black directors with particular skill sets. Our most recent addition is the CEO of one of the really big Blue Cross Blue Shield insurers with 16 million insured lives and 46 billion in revenues. And he diversifies our board and also is at the forefront of all trends in healthcare, really understanding how the payers think is going to be a great addition to our board. So that board helps us. And you have been in many boardrooms, Robin, and seen how important governance is. A bad board can make a situation so much worse. They can do incredible damage, and a good board can really steer the company and help management do the kinds of things during COVID we just talked about. And that's just a great benefit to our investors, and one that I still think is wildly underappreciated.
Yeah. The NYU folks are flashing at me that we've got only a couple of minutes left. So a final word. I know you tend to be optimistic generally. You're sounding very optimistic today. So as you think about where this is all going and the areas you see strength in, any shifts you think of for Ventas in terms of adding another vertical, expanding one of the verticals over the others, and then anything that worries you going forward, if there's any particular 1 or 2 things.
Well, I'll start with the worry list, and I think it really is simply a clinical one, is we've got to get past the pandemic, and we've got to make sure that we get a vaccinated country, a vaccinated world, so that commerce can continue again and the economy can grow without government support. Again, the government support is a bridge to start us going again, and then we have to continue that momentum absent the government support. So in order to do that, the clinical is the foundation. And what worries me is that we don't have the discipline to do it. So, but if we can do it, I think the sky's the limit really for most businesses and the economy.
The discipline from a financial perspective, or in terms of the public not wearing masks and things like that?
Well, in terms of the economy and the public getting back to what we all care about, which are personal connections, family, some level of normalcy. But, really, I make the case that the economy can't reach its full potential until we really get the clinical aspects of the pandemic under control, both in the US and globally. But then, again, I do feel optimistic. We are seeing, recovery and resilience in demand. Of course, our business is demographically driven across all those 5 verticals. And we know that we are optimistic because we're going to have a huge amount of our population be 65 and over and 80 and over. It's the fastest growing segment. And I have been really heartened and encouraged that in senior housing in particular, the demand has been so resilient, and it has really proven the value proposition that the industry offers to seniors and their families. And that has buoyed me and carried me really through this really difficult time period. And it gives me hope for the future. And, my colleagues and I have had a great team throughout, and we hope to win the recovery. And that's where we're all focused.
Well, good. Well, on that positive note, thank you, Debbie. Really appreciate your time. And here's to 20 more years at Ventas and more 20% compound annual returns.
That's what we want to achieve for sure. Thank you.
Thank you very much. Take care.